it's Monday morning, and you wake up, and even before the stock market opens, crypto's already been on a roller coaster ride all weekend.
Yeah.
It really makes you think, what is going on behind the scenes when Wall Street is still sleeping? So that brings us to a really big question that we're going to dive into today.
Okay.
Is the 4-year crypto cycle dead? And we're going to unpack that with some really insightful perspectives from this YouTube discussion we found with a panel of crypto analysts.
Sounds good.
All right, so our mission today is pretty straightforward. We want to cut through all the noise of the 24/7 crypto news cycle and bring you the key takeaways about what's happening right now and whether or not that 4-year cycle that everyone's been talking about for so long is still a valid thing.
Yeah, definitely.
Well, let's get into it.
Yeah, one of the first things that jumps out at me is Bitcoin's been acting pretty interesting lately. The whole crypto market's been on a pretty wild ride this past week.
Yeah.
But Bitcoin itself has actually been pretty resilient. It's basically been trading within this pretty tight range, 5 to 10% for the past, 3 or 4 weeks.
So let's talk about that for a second, because things haven't been all that stable when you zoom out and look at the bigger economic picture.
Right.
So what you're saying is Bitcoin has actually outperformed the U.S. stock market.
Right.
Especially the NASDAQ. That seems kind of odd, right?
Yeah.
Especially when you think about how gold, the classic safe haven asset, has been going through this huge surge, people are rushing to safety.
Exactly. It's interesting because it kind of goes against that whole idea of Bitcoin being like digital gold.
Right.
Normally when things are uncertain, you'd think that both Bitcoin and gold would go up because investors are looking for those safer places to put their money. But that's not really what we're seeing right now.
Yeah, so if Bitcoin isn't really acting like the new gold standard, at least not right now, what can we take away from how its price is moving? What does it tell us about how investors are thinking about Bitcoin right now?
Well, if we look at the bigger picture here, and this is something one of the analysts pointed out, Bitcoin's kind of acting like a speculative asset right now. It's really tied to the U.S. stock market,
right?
Particularly the S&P 500 and maybe even the QQQ, which tracks the NASDAQ 100. And this analyst said you can actually often predict how Bitcoin's going to move day to day just by watching the S&P 500 futures.
Wow, that's a pretty strong connection there. Even with things like MicroStrategy.
Yep.
Michael Saylor just bought a ton more Bitcoin, like another 22,000 coins on top of what he already has.
Yeah.
Which is already a lot.
It's a lot. Those big purchases, like what Saylor's doing, definitely push the price up, but they haven't been enough to break that connection with the stock market.
Right.
It seems like the overall feeling about the economy and how those traditional markets are doing is still the most important thing.
Okay, so it sounds like, for now at least, Bitcoin is moving in sync with the stock market.
Yeah.
But let's get to the main thing we wanted to talk about today. The 4-year cycle. Is it still a real thing? Because we saw some different opinions about this in the stuff we were looking at.
Yeah, definitely. And the analysts we were listening to, they all had some pretty different takes on this. So on the one hand, you have people saying that the traditional 4-year cycle, the one where you have that accumulation phase after the halving and then you get that big expansion, the peak and then the correction.
Right.
They're saying that might be changing, maybe it's becoming something completely different, what some are calling a supercycle.
A supercycle.
Yeah, and they point to things like Bitcoin ETFs, which make it easier for big institutions to invest in Bitcoin.
Right.
And those huge purchases by companies like MicroStrategy, they're saying those things might be changing the game and disrupting that historical pattern.
So you're saying that all these institutional investors coming in and these new, easier ways for people to invest in Bitcoin through ETFs, are they basically changing the rules of the game?
That's exactly it. The old cycle has always been linked to, a ton of new money coming into the market.
Yeah.
Usually through things like quantitative easing, where central banks just pump a bunch of money into the economy.
Right.
And the last time we saw something like that was back in 2020. So some are saying the expansion phase of the cycle, the one that's usually driven by this new money, is still kind of lagging behind.
Yeah, that makes sense.
Yeah.
But we also saw that crazy thing happen, right, where Bitcoin hit a new all-time high before the halving even happened.
Exactly. That was totally unexpected. And it kind of throws a wrench in the whole traditional timeline, doesn't it?
Right.
It shows us that something fundamental has changed in the market.
Totally. And one of the analysts said something really interesting about retail investors.
Oh, yeah. What was that?
Well, they were saying that a lot of people right now don't have that much extra money to throw around. Because, things like credit card debt are at record highs, and a lot of people are behind on their car payments and their mortgages. So their point was that when new money does finally come into the system, like through more quantitative easing or something, it could have a much bigger effect on crypto than it normally would because all those everyday investors are kind of tapped out.
Yeah, that's a really good point.
So it sounds like the old playbook might not be working anymore.
Right.
So what are the experts saying about where Bitcoin's price is headed? We heard a few different predictions, right?
Yeah, we did. And what's really interesting is that most of them are pretty optimistic, even though they see things playing out in different ways.
Okay.
So, for example, Tom Lee, he was on CNBC recently, and he said he thinks that this is actually a good time to be buying Bitcoin. He said he thinks it could go to $150,000 or even higher this year.
Wow. That's a pretty big prediction coming from a respected analyst.
Yeah, he's pretty bullish on Bitcoin.
Okay, so what did some of the other people say?
Well, Lawrence Lepard had a different take. He thinks Bitcoin's going to drop a lot first. Like maybe we already saw it with that pullback from like $78,000 to $83,000. Yeah. But then he thinks it'll rally hard and could even go up to $250,000.
A big drop followed by an even bigger rise.
Exactly. That's a bold prediction.
It is. And what about Marty's three-vector accumulation theory? What was that all about?
Oh, yeah, that's an interesting one. So he thinks that Bitcoin basically goes through these phases where it doubles in price. And he believes that we're in the third phase of that right now.
Okay.
And that this phase could take it up to like $150,000, $260,000. But he thinks that'll happen after we get more clear regulations around crypto and maybe even some countries start adopting it as like an official currency.
So he's looking more at the long-term picture.
Exactly. He thinks the fundamentals are really strong.
And then there was that other analyst who said Bitcoin could hit $200,000 by the end of this year.
Right. They're saying that the bull run is still going, but it's just not following the same pattern as before.
Okay, so it sounds like everyone's still expecting Bitcoin to go up, even if they don't agree on exactly when or how it's going to happen.
Yeah, I think that's a fair summary.
All right, well, let's switch gears and talk about another crypto that's been getting a lot of attention, Solana. And everyone's wondering about the potential impact of Solana ETFs. We actually had a listener ask specifically about this.
Yeah, this is a really interesting question, especially because we just saw those Ethereum ETFs launch. And, everyone's kind of wondering if the same thing is going to happen with Solana.
Right, like will the price go down after the ETFs launch or maybe just stay flat for a while?
Right, but the analysts we were looking at, they actually think that Solana ETFs might play out a little differently.
Okay, why is that? What makes the Solana ETF situation unique compared to Ethereum?
Well, for one thing, there's a ton of Solana ETF applications that have been filed. Like we're talking about 7 different proposals.
Wow.
Yeah. And Fidelity's proposal in particular, that one's pretty aggressive. They're using this rule that some people think actually defines Solana as a commodity.
Like a commodity like oil or gold.
Exactly. And that's important because if Solana is considered a commodity, it could make the ETF approval process a lot smoother. And it's interesting because the CFTC, the Commodity Futures Trading Commission, they already allow Solana futures trading. So it seems like the regulators might already be leaning toward treating Solana more like a commodity than a security, and that's a big difference when it comes to ETFs.
Right, so you're saying that the regulatory landscape might be more favorable for Solana ETFs than it was for Ethereum at first.
Yeah, that's what it looks like. And beyond just the regulatory stuff, there's also the technology itself and the whole story around Solana. It's starting to be seen as the next Linux, like the operating system that powers so many computers.
Yeah.
They're saying Solana could be like that for all kinds of applications in the future. And this is different from Ethereum, which some people think is struggling with its scaling solutions.
Yeah, Ethereum's been having some trouble making transactions fast and cheap.
Exactly. And some people even think that the layer 2 solutions that they're building on top of Ethereum.
For people who don't know what layer 2 solutions are.
Right. Layer 1 is the base blockchain itself, like Bitcoin or Ethereum.
Okay.
And layer 2 is built on top of that to help process transactions faster and cheaper.
Got it.
And some people think that these layer 2 solutions are actually competing with Ethereum itself, which isn't good.
So they're saying that Solana's core technology is better than Ethereum's because it has more potential for different uses and it's not running into all these scaling problems.
Exactly. And they think that could make the Solana ETF a lot more attractive to investors, especially the ones who are in it for the long haul.
Okay.
Oh, and another thing, the staking rewards for Solana are way higher than they are for Ethereum.
Right. Staking is when you lock up your crypto to help secure the network, and you earn rewards for doing that.
Exactly. And because more people are staking Solana right now, there's less Solana available to be sold on the market.
So the supply is lower.
Right.
Okay.
And that means the price could go up even more after the ETF launch compared to what we saw with Ethereum.
Okay, so it sounds like there's some pretty strong arguments for why Solana ETFs could do really well. But what about Solana's price right now? We heard some people talking about some key support levels.
Yeah, so there's this level around $125 to $128 that had been holding pretty strong for a few months.
Okay.
But recently, Solana broke below a key support level on the SLLBTC chart.
Right. The SLLBTC chart shows how Solana is performing compared to Bitcoin.
Exactly. And that breakdown suggests that altcoins in general are kind of in a downtrend against Bitcoin right now, including Solana.
So even though the long-term story for Solana might be good, the price is struggling a bit in the short term.
Yeah, I think that's fair to say.
Which is kind of par for the course in crypto, right?
You got it.
But there was also that discussion about the Lind effect in technology adoption. What was that all about?
Oh, yeah, that's interesting. So the Lind effect basically says that the hardest part about getting people to use a new technology is getting those first few people on board.
Right, like early adopters.
Exactly. And
Yeah.
once you get enough people using it, like in the real world, the rest of the adoption happens much faster. And this is relevant to Solana because some people were saying that its value is mainly based on meme coins.
Right.
But the analysts we were looking at, they were pushing back on that. They were saying that Solana's value is actually tied to the technology itself and the fact that more and more people are using it.
So they're saying that Solana is not just a meme, it's got real utility.
Right. And they point to a bunch of things that could drive Solana's adoption even further in the future, like the Saga phone, which is a crypto-focused phone.
I heard about that.
And Fire Dancer, which is this new validator client for the Solana network that's supposed to be really fast.
Okay.
And then there's the whole thing with USDC being minted on Solana. That's a really big deal for stablecoins.
So there's a lot going on with Solana right now.
Yeah, it's a really exciting project to watch.
Absolutely.
Yeah.
Okay, well, let's talk about the big players. Now, the institutions and that whole thing about market manipulation.
What's crazy is how fast institutional adoption is happening right now.
It seems like every day there's a new headline about some big company buying Bitcoin.
Yeah, and MicroStrategy's recent purchase of 22,000 Bitcoin is a perfect example of this.
Uh-huh.
They have like 530,000 Bitcoin now, which is almost as much as BlackRock and Binance have.
Wow.
It's like an arms race to accumulate Bitcoin among these huge institutions.
Yeah, and it shows you how much confidence these big players have in Bitcoin as a long-term investment.
Definitely. And it ties into that whole Bitcoin will save you
Yeah.
narrative.
Right. But what about the people who bought Bitcoin near the top of the last cycle? They're probably not feeling so saved right now.
Yeah, that's true. It's tough for those who bought high and are now sitting on losses.
Yeah.
But the point is that it's never too late to get into crypto, especially because we usually see these long periods of sideways price action, what they call chop.
Right.
And then those are followed by these huge rallies. So you just got to be patient and believe in the long-term value of Bitcoin.
Okay, and what was that thing about consensus trades?
So consensus trades are basically trades that everyone thinks are a sure thing.
Like everyone's bullish on a certain asset?
Exactly. And what's interesting is that during those times when the market's just going sideways, those trades can actually do worse than you might expect.
Really?
Yeah, it's kind of counterintuitive. But if the market suddenly drops, those popular trades are usually the first ones that people sell off to protect themselves.
Mm.
But on the other hand, when the market starts going up strongly, those same consensus trades can see the biggest gains.
So it's not always as simple as just following the crowd.
Exactly. You got to be careful.
Okay, and there was also that concern about the declining on-chain activity on the Bitcoin network. What's the deal with that?
Yeah, so that's something to keep an eye on because it could affect the security of the Bitcoin network in the long run.
How so?
Well, lower transaction volume means lower fees for the miners who are securing the network.
Right, the miners are the ones who are processing the transactions and keeping the network running.
Exactly. And right now, the average transaction fees for Bitcoin are really low, like around 30 cents.
Wow, that's cheap.
It is. But if it stays that low for a long time, it could make it less profitable to be a miner. And that could affect how secure the network is.
Because the miners are incentivized to keep the network secure by those fees and the block rewards they get for mining new blocks.
Exactly. So if they're not making enough money, they might not be as motivated to keep mining.
Right, that makes sense. So what about all the price volatility we see in Bitcoin all the time? The analysts were talking about market makers and how they might be contributing to that.
Right. So they were saying that a lot of the volatility comes from these market makers who operate on these offshore crypto exchanges.
And these exchanges are often unregulated, right?
Yeah. Sometimes people even call them casinos because they're not as tightly controlled as traditional exchanges.
Okay.
And these market makers, they basically make money by betting against retail traders.
So they're profiting from the price going up or down.
Exactly. And
Yeah.
that can really amplify the volatility because they're basically adding fuel to the fire.
So it's not always just regular investors buying and selling that's causing these huge price swings.
Right. It can be more complicated than that. But there was some really big news that came out recently that could actually help to stabilize the market.
Oh, yeah. What was that?
The FDIC, the Federal Deposit Insurance Corporation, they said they don't see any reason why banks can't get involved in crypto.
That's interesting.
Yeah, so they're basically opening the door for banks to offer things like custody services for crypto assets and help people use stablecoins.
And that's a big deal because it could bring a lot more legitimacy to the crypto market.
Exactly. And it could also reduce the amount of market manipulation that's going on because those futures markets might move from those shady offshore exchanges
Right.
to regulated exchanges here in the US.
So we might actually see Bitcoin's price become less volatile if this happens.
That's the hope. And it also sounds like those offshore exchanges might be in for some more scrutiny from regulators.
Yeah, they might be getting squeezed from both sides. The banks coming in and the regulators cracking down.
Exactly. It's going to be interesting to see how that plays out.
It is. All right, well, let's zoom out for a second and talk about the bigger economic picture, the macro factors that could be affecting crypto.
Okay.
There was that Bank of America study that was mentioned. What did they find?
So they found that 58% of investors think that gold is the best investment right now, with all the trade tensions going on around the world.
Right, gold is seen as that classic safe haven asset.
Exactly. But what's really interesting is that they ranked Bitcoin higher than stocks.
So even with all the uncertainty in the world, investors are still seeing value in Bitcoin.
Yeah, I think that's a really positive sign.
It is. And what about the relationship between Bitcoin and the US dollar index, the DXY?
So usually when the dollar gets stronger, Bitcoin's price goes down and vice versa.
Right, they have an inverse correlation.
Exactly. And one of the analysts thinks that the dollar might be topping out right now.
Meaning it might start to weaken?
Right. And if that happens, it could be really good for Bitcoin.
Okay.
But there's also the argument that other currencies around the world are weak right now, too.
So the dollar might stay strong just because it's the best of a bad bunch.
Right. So it's still kind of unclear what's going to happen with the dollar in the near term.
Yeah, we'll have to wait and see. And then there was that big news out of China.
Right. Oh, yeah, the quantitative easing.
Right. They pumped a ton of money into their banks, like $73 billion.
Yeah, and to put that in perspective, their response to the 2008 financial crisis was around $450 billion in total.
Wow. So this is a big deal.
It is. When that much new money comes into the system, it usually ends up going into all sorts of assets, including crypto. So
Yeah.
this could be a major driver for Bitcoin's price.
It's like they're trying to stimulate their economy, and that could have a ripple effect on the whole world.
Exactly. And then there's all the speculation about China maybe changing their stance on crypto.
Right.
Remember, they banned crypto trading and mining a while back, mostly because they were worried about capital flight.
Right. People were moving their money out of China.
Exactly. But now some people are saying that China might be softening their stance because they want to be a leader in technology.
And they're feeling more confident about their economy now.
Right. So even if they don't fully reverse the ban, they might start to loosen things up a bit. And that could be huge for the crypto market because China is such a massive player.
Yeah, that would be a major bullish catalyst, for sure. And speaking of bullish catalysts, there was that mention of the S&P 500 mini futures.
Right.
They seem to be finding support at a key level, which is a good sign for the stock market.
Yeah, it could mean that things are starting to stabilize a bit.
And that's good news for Bitcoin, too, since it's been so closely correlated with the stock market lately.
Yeah, definitely.
So to sum it all up, it seems like the 4-year crypto cycle might be changing in some pretty big ways.
Yeah.
Institutional investors are becoming more and more important. New investment vehicles like ETFs are changing the landscape. Bitcoin is still tied to the stock market, but there are a lot of positive things happening under the surface,
Right.
like the potential for new money to come into the system and more adoption by institutions.
Yeah.
And even though the experts don't agree on where Bitcoin's price is headed, they all seem to think it's going up in the long run.
Yeah, they're pretty optimistic.
And Solana's looking really interesting from a technological perspective, with those ETF approvals potentially coming soon. So it's definitely a crypto to watch.
For sure.
And then you have this whole thing with institutional adoption accelerating and regulators starting to get more involved,
You're right.
which could actually lead to a more stable and less volatile crypto market in the future.
Fingers crossed.
And finally, we have all these global factors to consider, like what's happening in China with their economy and their stance on crypto.
Yeah, that's a big wild card.
It is. So basically, the crypto market is a really complex and dynamic place right now.
Definitely.
But hopefully this deep dive has given you a better understanding of what's going on and what the experts are thinking.
Yeah, that was the goal.
And it leads us to this final thought for you all to consider.
Okay, what is it?
Given everything we've talked about today, all these changes happening in the crypto market, all these new players and all this uncertainty, what are some new investment strategies that you might want to explore, beyond just the typical buy the dip approach?
Yeah, that's a good question.
Maybe it's time to start thinking outside the box a little bit.
Right.
Maybe you should look into how institutional adoption is changing things.
Yeah.
Or maybe you want to dive deeper into layer 1 technologies like Solana.
Yeah.
Or maybe you want to understand how global monetary policy is affecting crypto, because that's a whole other layer to this.
Yeah, there's a lot to learn.
There is. So keep learning, keep researching, and keep asking questions.
Yeah.
Thanks for joining us on this deep dive into the crypto market. If you have any questions or topics you'd like us to cover in the future, let us know.
Yeah, we'd love to hear from you.
Until next time, stay curious and happy investing.
See ya.
Bye.